Welcome to Trading Lounge and the soft commodities report, and starting with soybeans here. It is possible for soybeans, wheat and corn to have a turning point in them to move to the upside. We'd need more evidence of this, but it's certainly on the card. So it's something that we'll be working through later this week and also next week. If that is the case here, then we'd be looking at the ending of this correction here in terms of wave 4 to wave 5 here. Some markets haven't made new lows. Some of the grains haven't made new lows here, and they would be counted slightly differently. But yeah, let's see what we go. I mean, we can't really confirm that until we get a nice move, coming up through here. But there is a wave count, this wave count, that would suit a turn in the markets. But we need evidence, and we don't have that yet. So it's just in the guessing game stage, but I wanted to put it on the table and work through it. And this would be on the small account here, would be up for one, an A and a B and a C here, and moving up strongly through here. So if we get support on 980, then that would be the first inkling of the structure being in the right, the labeling being in the right place. Now, as it stands at the moment, it's a bearish count at the moment. So anyway, let's just see if we get a nice sharp move up through the top here, up here, and we develop support on here, which is good. Well, then that's highly likely at that stage. So that's something that we can look at, and we can look to build on the long side if that is the case. We want to see the US dollar fall into place as well. So just with the US dollar, for example, just to bring you up to date here, if this is 100 here, we've seen the US dollar move up here. We've seen it move down for its A wave, back up in a B wave here, and the US dollar has moved down in a C wave, which is always in 5 waves, and is currently right in here. So it's got a little bit more of the 4th wave to go than the 5th wave here. So that's obviously will give commodities a bit of strength while it moves down here. But once that's finished and moves up, there will be pressure on it. So we've got a lot to work through yet, but we just really want to see the A wave, the B wave, and the C wave completed for the US dollar index. And as it moves higher, then we can have a look at what commodities it's placing pressure on. But after all, commodities are all about supply and demand, but weather and dollar come into it as a sideline. So we need to see what how that applies here. So anyway, just shooting the breeze. So let's just see how we go with this. Just clean this up here. And the corn market, we're still short here, and at the end of the week we're going to bring, on the Friday, we'll bring this reverse 361 down into, I wonder why I've got it at 361. I already had it here. It's a bit weird. I have to double check what I've done there. But look, the normal thing at the end of the week, we'll bring it down to this area here, onto the top of this bar here, which is 362. So 363 for that at the end of the week there. The wave count here, I was looking at this here completing, because we'd been looking at 5 waves here, 1, 2, 3, 4. Not a very good sort of thing here, but it fits. It's okay, and we've got 1, 2, 3, 4 here. So we're looking at 5 waves completing down through to here. And, even so, we would still need to see from the low here, we would need to see an impulse wave back above 372 at least, in 5 waves here before we can, call a low in here. Because the market gapped here, it hasn't left us in a really nice sort of count. So, but anyway, if we didn't get that spike and it was short, it would still be 1 and 2 and 3 and 4, and then extending into fifth wave here. But I know that we can enlarge the wave count as well to the downside. Anyway, the main point is that we're on the right side of it. There can be a possible low, then we'll need to work through that as well. So if we see soybeans and wheat and corn, one of those lead to the upside, then we know where we are with that and what we have to do with that as well. The wheat market here, we're also short here as well, and we have our stop at reverse at 491. And yeah, at the end of the week, we'll bring it on the Friday, we'll bring it down to wherever this low is here as well. In terms of the counters, a little bit like corn as well, in terms of its move down. Now, there's this low is higher than this one here. It's possible that this is wave 1 and 2 here, and all of this being wave 3 here. Now, I don't know that as yet. This move down here counts quite nicely as 1 and 2 and 3 and 4 and 5 down to this point. Now, I know that this little move in here is corrective in 3 waves, so it is possible that we can get this as an A wave, a B wave, and a C wave, or maybe even retesting 500 or thereabouts, but something like that. And then down here, that's the likely probability with all of this. And yes, it can move down from here too. The main point is that this move here is in 3 waves. It's corrective. So at some point we'll make new lows. That's it. If we have to rally, we could rally up to here. We could rally to the back, to the old high here. We would need to have a look at that as it progresses to the upside, but we're on the right side, and that's what matters. The coffee market, we're short here. It's broke the low here, which is fine. So yeah, look at the end of the week, we'll simply bring that down here. We're expecting new lows below here because all of this being a corrective pattern here. The corrective pattern here is not really easy to, well, it is easy in terms of from this low here, we're looking at it as an A wave, a B wave, and a C wave. That's quite easy, not a problem. Then we have 5 waves down, which we could call wave 1, and then an A and a B and a C here for wave 2. That works well. But when I start getting into this here, it's just creating overlapping wave structures, and it's messy. I can see that this is in 5 waves here, so we'll get a bounce off the 130 or thereabouts. And this little move down here doesn't count very well. I can get sort of, looks more like an A wave here. This is rallied really high here on a spike and creating overlapping wave structures. So all of this here is not a very easy count to count. You know, if I had to count it and take a guess at it, well, then I'd just put wave 3 here, but it's still very short compared to what we need from wave 1 here. So we could still be working through a larger wave 4 here as such as well, in terms of some sort of complicated sideways pattern all the way through here. So I'm not really clear. I do know, as I mentioned before, that we will find support on top of group 1. We will get a bounce, and that's that really. But once again, we're on the right side. Now the sugar market here is triggered us short here at 1276 here, and it's what we expected as well in terms of the wave count here too, because it'd been quite a long and laborious rally through here as a wave 4, and we did all the right things as the A wave because we knew it was corrective because it was in 3 waves here. So we just kind of had to figure out and allow it to mature and not get in the way of it and all the rest of it. And we did all the right things. We were short down here, we were long up here, and now we're short here, and we expect new lows here. This level here, the 1150, is a medium level, and it's halfway between the 10 and the 13, which are major levels. So this is the one that we're going to get the bounce from, and wave 5 here should be roughly the same length as wave 1 here. But we're also looking for a larger picture to the downside of a 3, 4, and 5 here. How we're going to navigate this here, I'm not quite sure. Let's just see what type of bounce we get off here. If it starts to bounce before we get here, then we know that we're going to get a stronger bounce, and we'll cover our short positions, and we'll just chill on that one, and we'll wait for the next setup again. But if it sinks into it and locks into it, then a bit like this here, then we can drive it down a bit further from that point there. But yeah, longer term target $10. The cotton market, So because of the new contract and the wide pricing, we sort of wanted to re-enter this, but we haven't entered yet. But we will at 65.46. That's the breaking of this low if it comes about. Okay, so we're just waiting on that. We know the move up is corrective in terms of the A wave. Well, that's the low there. The A wave. Then the A, the B, and the C for the B wave, and looking for the C wave here, which can be finished. And as that sharp move down here sort of indicates that we could be certainly on the right track. Now, if that is the case, then this current move down through here would kick back in 3 waves at, that's just 61.8. 50, 60%. So basically in this space here, if I had to map that out for you, which I did this morning just to get an idea of it. So from that high down here, it does appear we've got 5 waves here. So look at this as an A wave, a B wave over here, and then 5 waves up through to here, and we've got 1 and 2 in here. So a little, maybe somewhere close to the 67. So if you see weakness, if you can see 5 waves here, then weakness, then that would be the way to short it from that point there. The orange juice market, we're long in this, and we expect it to move up further, but as part of a corrective pattern here. So pretty simple, like the A wave, the B wave, and the C wave moving up here in 5 waves. Now, it's not displaying a very nice 5 waves here, so it may just be that the ABC correction is already built into this where the A wave is here, and this is wave 1 down. So we'd be looking at 50-60% retracement level for this, which would come in at, well, pretty much where it is, a little bit higher there. So it'll be interesting to see how this climbs here and see if it folds back. Let's have a look at the internal wave structure here. This little move up, this is the low, and so all this structure from here above was what we're looking at. So you can see that it's in 3 waves here, so it's corrective. Yes, it can move higher based on that. It can be an A and a B and a C wave and move higher here. But the main point here is that it's corrective and new lows should be made in due course. The cocoa market as well. We've exited here at the 2900 here because we figured there would be a reversal in the market, and that reversal's come into play reasonably well, and we're not short yet, but we would be at 28.49. The structure up here as well is corrective. So from the low here, a very clean, clear 5-wave structure here, very much like Sugar had in its wave 4 rally in its first leg, then the B wave and the C wave. So Sugar did very much the same thing, and then it broke lower from that point. So that's what we're kind of looking at here. It's a bit of a wonky trend line. They move in the night when you open and close them. But yeah, so if you've got nothing to do, try and figure out the 5-wave structure in here, and then we'll be looking for a counter trend, obviously back into supply and closest largest number, and then, folding over lower from that point there. Alrighty, cheers. Thanks for tuning in.